Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for February 9th, 2020. Before I get started, let me give you a gentle reminder that it is Valentine's Day this week. It's Valentine's Day this week. Do not procrastinate with your loved one, right? Right? Okay. But no, actually, let me give you a really quick rundown. If you haven't used ForexAnalytix, or let me say if you're not using it, make sure you try us out. It's only $1 for 10 days. And when you try it out, it doesn't matter what version you're using, whether it's the premium or light version, you get the mobile app with that. And while you're trying out ForexAnalytix, you'll be using the premium version just to try it out, no matter which version you go with. So make sure you try us out and don't wait. All right, now let's talk about this next week. Actually, let's talk a little bit about this last week. And let me move this data flash over. This is real-time breaking news as the news is being released. That little pop out, I'm going to move it out of the way so I can show you some of these charts that I've been looking at. So we've had a big move in the dollar. Big move in the dollar. Matter of fact, I want to talk a little bit about the dollar index because it's really important. The dollar, we broke out above November's highs. We're at 161% extension. Not quite overbought on the dailies. It still looks like we could probably challenge 99, at least before getting some sort of pullback here. What I would be thinking is something like this. Let me just draw it out for you. Maybe a rally to the 78%, pull back. And then whether we go to past 99 towards 100 or these recent highs, or it just actually gives us a reversal, probably has more to do with risk appetite. And as you guys know, as stocks are stronger, the dollar is going to stay stronger. If the dollar weakens, we will see probably some of these dollar longs unwind. That has been my long working theory for the last, I don't know, 6-12 months, something like that. Just go back and listen to, the videos each week. As long as the stock market stays strong, which if you didn't see it last week, we hit all-time highs. I expect the dollar to strengthen. But if stocks start to reverse a little bit, you will see probably the euro dollar bounce. The euro is and actually I'm trying to think what bank, one of the major FX banks had a write up about the dollar or the euro being the funding currency. It's a carry trade. It's the same thing that we saw with the yen back in the mid 2000s. It's just an early to mid 2000s. It's a big carry trade. So the problem with that is if stocks weaken and the market needs to reverse some of those positions, you'll see the euro probably rally a little bit. Now, does that mean the euro is out of the woods? Probably not. If you look at the euro dollar, and let me take you over to ForexAnalytix really quick, and I'll take you to the daily chart that we have here. If you look at the euro is about ready to. It's about completed the head and shoulder pattern. All right, that takes us to about 109. Now there are different head and shoulder patterns that people are looking at. So let me give you a little bit of a technical lesson, if you will. All right, regarding head and shoulder patterns. Head and shoulder patterns, for those of you that do not know, are reversal patterns. They're not continuation patterns. This is where I think a lot of people get confused. That doesn't mean that the euro can't continue to go down. Let me also state that. So you can get a move that is a head and shoulder pattern that actually works out as a continuation, but in all actuality, it's more of creating bad habits along the way. So when you're looking at the euro dollar, this was a reversal pattern. We had a nice rally, false breakout, shoulder, head, shoulder. The neckline was actually right here at 110.60. And the reason why I'm using these charts on TradingView because I can actually draw on them. Where ForexAnalytix, I got to freehand it a little bit, but you can read the analysis there. So, but you can see here's the head to neck. Okay, that should equal the distance from the the neckline lower. So we could really retest these lows basically. Okay. And it seems realistic. I mean, you're going to start to see the 161% extension of the euro come down to here around the 109 and a quarter, 88% retracement about 109 and change. An overshoot below 109 makes logical sense to me. So the euro, like I said, it still looks bearish right now. You just got to be a little careful as we approach these trend lows, okay? And that's where this dotted line came through too. It's the same thing. I had drawn it from last week. But other traders, I've seen and heard a lot of them are talking about this head and shoulder pattern. Let me undo that. Okay, let's see this. Okay, this one. Now, something that looks like this. All right. Other traders are looking at like this head and shoulder pattern, but you see if the neckline is actually here where that I have this blue support zone, which by the way we broke through, so I can just go ahead and get rid of it. If we break through this neckline now, you would go, wow, all right, well the projected move here would go something like this. Oh wow, then they start going, oh wow, we can really target 107. But see, the problem with this analysis, in my view, is it's the head and shoulder pattern is not a continuation pattern. Continuation, right? Big continuation. When you don't have an arm to complete, this being the arm here. Whoops, not that. Sorry. This. Okay. Like, an arm to complete down here, then it's not a continuation pattern, right? It's because there's nowhere to, measure how far we're going to go. Like I said, it doesn't mean that we can't continue lower. It's just I look at targets a little differently. Like I wouldn't be targeting down here at 107. I would have to use like some sort of fib extension, maybe of the last move. Like something like this. I mean, this would be a 261% extension of this move. Takes us down to 108 and a quarter, somewhere around there, 108.22. So if we broke through there, I would think, okay, we might extend it a little further and then bounce. The reason why I point all this out is because if you get too excited about some of the targets that you might be looking at an inverted head and shoulder pattern it's disguised as one, but it's really not one, then you might never reach your target, and that's where some of the bad practices come through. So like I said, currently we are in a head and shoulder pattern, right? And the target does point us to, let me zoom back in here and let me reset that actually. So the target here does actually point us to these lows. Everybody should be looking at 109. I mean, I can't imagine how many orders are sitting there to take profits on shorts around the 109 level. Technically, I mean, you got a significant low down here where you could argue that we are trying to build a bigger, longer term base in the euro. So a 109, shoot below 109 to 108.80, 108.70 even, just to breeze through these lows and just barely puncture a new low. That makes a lot of sense. Like I said, I think the euro is trying to develop some sort of bottom. And when you look at the dollar index, don't forget, guys, the dollar index we did have and we still have. All right, so that I say did and still, we do have the death cross over here. We have the death cross over here. That's when the 50-day moving average crosses the 200-day. We haven't crossed back up. Matter of fact, it's still valid. We could actually rally to 99 and reverse, and this 50 and 200 day are going to stay spread apart. Okay, and so that's something that you have to think about. That and then if we do fail up here, we are technically speaking making lower highs in the dollar index, and that's something that you can't ignore. All right. One of the reasons why I look at this dollar and I look with a little skepticism is because when I look at the stock market, just like you guys, you look at the stock market and you go, man, it is bullish. Yeah, I mean, we continue to break out. Are we overbought? you know, you could argue, obviously both cases. I do want to state that I think the coronavirus scare or that we've had, unfortunately for a lot of Asia, it's going to impact quite a bit. But I think we have peaked, and I think we're going to start to see, the numbers improve over the next couple weeks. The question is, how much damage does it do to the China slash global economy as a result? And we've already seen actions from China with rates, with short selling bans, providing liquidity in the markets. Will we start to see, first quarter growth, or will we see first quarter growth slow markedly? And that's up for debate, obviously. And I do think that the technicals in the stock market are stretched. And if you look at the daily chart in the S&P, we did have a false breakout. Okay. Now, I would venture to guess that we have to really drop below 3,200 in the S&P for anybody to get worried about the bullish trend. But the reason why I'm pointing this out is because if the stock market does peak and we start to see some, maybe some spring selling in the stock market, and, and maybe a drift lower into the summer, that would elicit some dollar selling, in my opinion. And that's where we really have to be a little bit more careful with the dollar up at these levels. That's why I'm a little skeptical about where, the dollar's at, and, can we actually breach 100 on this way up? Maybe we do. Maybe if the S&P, cruises up to 3,500, which, we don't have any indication that it's not at this point, other than it being, a little overbought. And, yeah, there's some arguments like the ones that I brought to you, but you could also argue the other side too, that, global growth is going to pick right back up, and, China trade deal, and, we're going to get back on track, and, so there's arguments on both ends. So, obviously if the stock market continues higher, yeah, I think the risk for the dollar index to actually break these highs is it. But I think we have to really pay attention to stocks, and you got to pay attention to the bond market too, because the bond market is really, generally speaking, ignoring the let me find the 10-year. It's generally speaking, it's been ignoring the rally that you see in the equity markets. What happens if the bond market continues to rally in the 10-year and yields continue to drop? What's that telling you? Or what happens if gold, which we've highlighted quite a bit, what if gold, that still looks pretty bullish here, it's not selling off? How about if that starts to hit new highs? Could we see maybe the bond market and the gold market's telling us a little bit different story than stocks are? So I think those are things that you need to be a little bit, watching into this next week. And let me go over to the S&P just so I can draw on it really quick. So I have to point out once again, we did have a false breakout. You look at the weekly candle and you go, oh wow, that's a really strong rally. It was, but we failed to close above the highs. That must be acknowledged. One last thing I guess I need to bring up before I talk about like the events that are coming up this next week. I know you guys can't ignore the yen, right? Like, I really, 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 really was thinking, was it Wednesday night and Thursday night? I stayed up a little later than normal because I'm like, man, maybe we're just going to start taking these stops, because what's going to happen is as soon as I go to bed, the stops are going to get taken above these highs and I'm going to miss it. I thought that both nights. I stayed up a little later and I said, it's not going to happen. So I just went to sleep. So we kept challenging this big multi-year trend line at 110 in the dollar yen, and we couldn't break. We couldn't. And then Friday, some of the, even after the strong jobs report, couldn't do it. So if you guys were listening to the FACE webinar on Friday, and probably on Thursday too, I'd have to go back and listen. But I know I've told everybody, hey, as long as we're above 109.50, no need to worry about the dollar yen. We on Friday we probed 109.53, I think. Yeah, 109.53 was the low. We probed it, bounced. This is now the line in the sand for the dollar yen. If you're bullish, As long as above 109.50. I know we talked about it last week, but I know now everybody's looking at it because it actually hit it and bounced, right? We knew about that, the day or two before, but on Friday it confirmed our suspicions. As long as we're above 109.50, there's no need to be bearish the dollar yen. However, if we break through 109.50, I think anybody who's long the dollar yen who was expecting a move above 110 is now going to be concerned. There's going to be a lot of stops down there, and then that also would signal that yields are probably falling, gold's rallying, and stocks are coming down. So those are, just kind of the things that I'm looking at going into next week. Not even have to do, that doesn't even have to do with any data. I'm just talking technicals. Now let's talk about some of the other things that are happening next week really quick. We do have the RBNZ. Yeah, and I shouldn't dismiss the fact that we do have like ECB President Lagarde speaking, but man, talking about being pretty much a dud. We haven't seen anything from her. She just sounds like a carbon copy of I almost said Trichet of Draghi. Just same message, and it's kind of like the yelling to Powell initially. There's really no change. So she is speaking next week. Fed Chairman Powell does testify next week, the Humphrey Hawkins testimony. So that could be a mover if you're, trading the dollar. You got to be watching, especially Tuesday, not so much Wednesday. Although, some of the questions that come on Wednesday could be maybe a zinger that comes out. We do have UK GDP coming out on Tuesday. Now, I guess I should point out a couple other things really quick. The cable closed below 129. Really key support here. That's something that needs to be noticed. Also, the Aussie dollar closed at 10-year lows. All right, that obviously needs to be watched. Now we do have the RBA Governor Lowe is speaking next week, but we have the RBNZ rate decision that'll be not Wednesday night. It'll be Wednesday morning in New Zealand, Tuesday night if you're in North America. Sleepy time while if you're in Europe. So that's something to watch. We also have inflation data, CPI on Thursday, and we also have, and all this is right here, guys, on the calendar. You can find it right here. Then on Friday we have the retail sales. So there are a lot of things that are happening next week, but I think technically, before you get too bullish or bearish the dollar, just keep in mind that if you look at the dollar index, in all actuality, guys, we've been pretty range bound for quite some time. You're talking, you look at the dollar really could be, if you think about head and shoulder patterns, and I'm just kind of looking at it like this right now. And we could be, developing some sort of longer term head and shoulder pattern here as well. And, and this would be a complex because you have the right shoulder higher than the left shoulder, and the neckline would be at a slant. So it becomes a complex head and shoulder pattern. That would be a reversal because that would be, after a prolonged uptrend, if we saw some sort of reversal like that, be quite bearish. So that's just some of my views going into this next week. And look, if you're watching this video via YouTube and you feel that it is this is really going to help you out next week, please give us a thumbs up. It really makes myself and the rest of the team that produces this video feel good about producing these things for you each and every week for free. So give us a thumbs up. Make sure you subscribe to our channel so you don't miss any of our miss any of our great interviews that Dale does throughout the course of the week, and all of our analysis throughout the course of the week. If you weren't around and you missed it live, you could come in and listen in. So I want to thank you guys for listening in today. My name is Blake Morrow. I'm with ForexAnalytix. Make sure you try it out today. I'll see you tomorrow morning on the Face webinar. And remember, it's Valentine's Day week, so take care of business. All right, guys and gals, have a great rest of your day. Thank you.